Good morning, everyone. Finance Talk, episode 12, and I am happy to be airing our first ever English podcast on September the 20th, 2019, Friday. Today, our guest speaker is Tom Cavaliere. He is a financial advisor with LPL Finances. He owns his business, Tall Oaks Advisors, and I will hand my microphone to him to explain to us what he does and answer some of our questions.
Hello, how's everybody doing? My name is Tom Cavaliere, financial advisor, wealth advisor with Tall Oaks Advisors here in Overland Park, Kansas.
Thank you, Tom, for accepting our invitation and sparing some of your morning time with us, giving our listeners valuable information and suggestions in terms of how to choose their financial advisors and what financial advisors do. I'm pretty sure everybody in their lifetime have heard financial advisor or wealth manager terms, but we lack the knowledge of exactly what you do. So can you tell us a little about what you do?
So as a wealth advisor, what I do is I look at everybody's financial situation. So like going to a doctor and getting a physical. So we first look at somebody's cash flow. We look at somebody's liabilities. We look at debt. We look at insurance. We look at investments. We look at education planning and estate planning. And we look at see where you are in each of those categories and what improvements we can make to help get you to achieve your financial goals.
Thank you so much. So why an individual person must choose a wealth advisor or financial advisors?
The biggest threat to somebody is themselves, meaning that that's their worst enemy because they don't have somebody challenging their decisions, meaning that they're doing it based on what they hear from the water cooler. What they need is somebody in the industry to help guide them so they don't make bad decisions. You will get there, and you'll get there the way you're going. The question is, can you get there in a more efficient way, meaning saving a little bit more money every month, eliminating some debt, getting your estate plan taken care of, looking at ways to manage your cash flow. Just somebody there questioning your decisions to make sure that you're doing the right thing for your family.
So there's a saying that nobody cares for your money better than you do. And people don't trust other people to manage their money and keep it themselves and try to manage it themselves. So what is your comment on this particular sentence?
So that's great. The thing is, a wealth advisor, being a fiduciary, that's what I am, is meaning that I have the best interest of the client first. Meaning that I'm looking out for the client before looking out for myself. Meaning that I'm trying to help them plan for retirement, and looking at fees, looking at expenses, looking at other costs that you might have that maybe that'll influence you in making a different decision. So it is very important when you choose a financial advisor or wealth advisor, you do want to work with somebody that's a fiduciary because then they do have your best interest first.
So you emphasize the importance of having someone by your side, managing your money, helping you grow. So what does most of your customers or clients approach you with? The first thing that they come to you for, whether it's saving for kids or want to have extra income?
Most of the clients approach me with is when their kids start getting older and they realize that college is coming and they need to save for that. Or they're approaching retirement and they realize that maybe they don't have enough for retirement, or maybe they don't know how much they're going to have in retirement, and looking at putting a plan to place to see with some forecasting what they'll have in retirement and how long that will last. And then the question is that enough or not? And if it's not, a couple things or three things you can do. One, work more. Two, save more. Three, spend less. So somebody wants to make some of those decisions, but they're not easy decisions. But having somebody walk down that path with you and help you guide and plan for retirement or education, it's that old verbiage. It's people don't plan to fail, people just fail to plan. So those are things that you should look at in savings for different goals. But there's a lot of people that don't have an estate plan done. Very important. You want to have control of what happens to your money after you pass. Next is education. There's lots of ways to save for education and what's the best for you. And then also retirement planning. There's lots of ways to save for retirement. But more importantly, what do you have available to you through work that maybe we can take advantage of?
Those are very good informations. Recently, I heard a TED Talk that talked about now the time is three-dimensional. Now the third dimension that got added on is the efficiency. So everybody has 24 hours a day. And the people who tend to do a lot of things within that 24 hours are called multipliers. They're not multitaskers anymore. They're multipliers because they look at time and say, oh, they look at a task and say, okay, is it something that I can eliminate? If they cannot eliminate, the second question is it something that I can automate it? And then the third question is it something that I can delegate it? So for me, it sounds like having a wealth advisor is delegating my most important aspect of my life, which is having enough money for retirement, having my kid to go to college, to a professional who knows what they're doing, who compared all those products and services and bring out the best solutions for you. Because if we go out and do all the research by ourselves, it's going to be time consuming and we will have gaps and slacks. So it is very important that we delegate what we cannot do ourselves into the hands of other people who are professionals. I have spoken to many people over the years while I'm studying in US, and one of their biggest fear of turning into a financial advisor is that they don't know where to start. And they're not locals. They're either immigrants, residents, and they don't have a substantial wealth or inheritance that they have taken control over. So for them to turn around and give their hard-earned money to a financial advisor is a very difficult decision, and there is nobody to actually hold their hand and encourage them and tell them that it is going to be beneficial in the long run. So what suggestions would you give to my listeners in terms of how they should approach a financial advisor and what qualities they should look in them?
Yes, that's a great question. Typically, you want to be introduced to a wealth advisor by somebody you know and trust, because typically that person's having a good experience with them, or they wouldn't let you be introduced to them. So that's something to look into. Also, you want to look at somebody that doesn't only sell proprietary products and services, because then they're trying to get you to fit into their model, versus you should be working with somebody that has non-proprietary or independent, meaning that they're looking for the different investments that fit you. So that's very important. And you want options. So you want to work with somebody that's giving you 2 or 3 options, narrowing it down for you to make a better decision for you, not coming back with just one recommendation. That's also something important. So that's also something that you need to look at. And then a fiduciary, if they're a fiduciary, they're also responsible for you too. So that's something to look at. But most importantly, I would always ask a friend of yours if they have a wealth advisor and if they're happy with them. If they are, it'd be great to meet with that person and see if you can work with that person, because a wealth advisor relationship is a relationship that you're going to have for a long time. And then eventually your children will start working with the wealth advisor, and then your grandchildren. So you want that person to be there for you and be kind of a friend to help you, guide you in your different financial goals and your journey of achieving those.
So, how do you know which financial advisor is the best fit for you?
So that's a great question. What I highly recommend people doing is asking that financial advisor or wealth advisor for a booklet, a data gathering booklet. And what that does is help you fill out the booklet for that person before the initial meeting. And then when you go in to meet with that wealth advisor, they have a picture of your situation. They have some recommendations for you on top of their head. So then what you do is you talk about your situation and you ask them, what would you recommend? What are some small recommendations that you would make to improve my situation? And then you do that with 2 or 3 different wealth advisors. And then you go back and talk to your spouse or significant other about the meeting, how it went. Did they get along with the person? And then also the recommendations that they quickly mentioned, do you agree with those? And you work with the one that you agree with the most, that you can get along with. But more importantly, you use the best of your time. You're doing the booklet before the meeting so the wealth advisor knows that you're serious. And then they have some things for you when you come in so you know that they're serious of working together. And then when you go back home, you talk and decide which one you're going to work with. So that's also, and then the fee structure. There's different ways that financial advisors or wealth advisors work with you. So each one's different and depends on what you like. So that's what I recommend doing.
Thank you so much. That gave me an idea that I have to do my booklet, what I want and how much money I want to have at certain time and before I meet with any financial advisors. So a lot of people say, oh, I don't make enough or I don't have a lot of money for financial advisors. Is there a benchmark or threshold of like how much you're supposed to be making before you reach out to financial advisor?
So I don't agree with that. Meaning that I have clients that are third generation clients, meaning grandchildren of the original client. And you got to work with them because they're family. So, no, what I look for in a client is somebody that's motivated to change their life and help improve them financially. So if you're willing to save, $25 a month or buy some term insurance or something like that just to start out, maybe a small disability policy, maybe get a will. If you're interested in moving forward with those things, then I'm interested in working with you, or any wealth advisor should be interested in working with you. And maybe that wealth advisor has a junior advisor or an assistant that you can work with them and guidance until you acquire a net worth that they meet their criteria, if that makes any sense. But they shouldn't just turn you down if you're willing to help. And there is no minimum or no late to start saving. There's no early to start saving. Earlier the better. But what I find with younger clients is a lot of their friends and family don't have a financial advisor because they're young and they say they don't need one. Well, it doesn't take a lot to just help, but saving and compounding interest does help in the future. And the longer time frame you have, the more compounding that you are able to get, or potentially get, I guess. And also there's no time that is too late to save. So an example, if somebody's going to college next year, it's not too late to save for college. There's ways to help you save for college, save money on taxes all at the same time. And then also with saving retirement, there's a lot of things at work that maybe you're not doing, or outside of work that you just haven't thought of. These are ways that wealth advisors can help improve your situation with small little changes.
All very good information. So I thank you so much for providing our listeners with information that they might have been asking themselves, whether we should approach one, how we find one. And recently, you mentioned about an event that's going to happen in Kansas. Can you tell us more about that?
So next Tuesday, I'm hosting a Social Security and Medicare symposium here in town. So if you find me on LinkedIn or Facebook, it advertises it. It's next Tuesday at 4 o'clock at Blue Hills Country Club. We're going to have guest speaker talk about Medicare and also a guest speaker talk about Social Security on how to apply for Social Security and also Medicare and Medicare supplement. So people have a lot of questions about that because those are decisions you make that are hard to change. So I'm holding that up to people to come in and hopefully get their questions or their concerns or their worries taken care of.
I'm really hoping that some of our listeners who live in Kansas City will have an opportunity to participate in that event and get their questions answered and meet new people and get their feet into this financial security, retirement planning, estate planning world. And I thank Tom Cavaliere for accepting our invitations and providing our listeners with valuable information that they will be using throughout their lives. So I will put Tom Cavaliere's personal LinkedIn and Facebook accounts as a comment underneath the podcast so our listeners can connect with him directly, ask their questions, and possibly set up a time if you are living in Kansas City or even virtually connect with him to ask questions. So to end our podcast, Tom, what is your most famous financial quote that you like to tell your clients or live by?
I think very importantly is I always tell everybody you should save 10% of what you make. I think that's a great thing to live by. So you just take 10% and put it in a savings account, and that's a good first step. That's very important because having a cash reserve is probably the most important thing in your life financially, because that provides you a backbone of just things that may happen, opportunities or issues or problems that may arise that you need some money that maybe you haven't saved for. So it's always very important to have a cash reserve.
Thank you. And on the brighter side, even though you're saving 10%, you're spending 90% of your money. Thank you, all listeners, and see you next time.